Hey everyone, and welcome back to the channel. Today we're diving into the foreign exchange market, specifically focusing on the New Zealand dollar versus the US dollar, or the NZD.USD pair. It's been a pretty dramatic week for the Kiwi, and we've seen some significant movement that traders and investors need to be aware of. So what's been happening? The NZD-USD has taken a serious tumble, breaking below the mid-0.5700s and hitting a new 6-month low. This isn't just a random fluctuation. It's a direct consequence of the latest announcement from the Reserve Bank of New Zealand, or the RBNZ. Earlier this week, the RBNZ held its monetary policy meeting and decided to keep the official cash rate steady at 5.5%. Now, holding rates isn't necessarily bearish news on its own. However, the real story is in the details and the bank's forward guidance. The RBNZ adopted a noticeably more dovish stance than the market was expecting. What does dovish mean in this context? It means the central bank is signaling a potential shift towards lowering interest rates sooner than previously anticipated. The RBNZ's updated forecasts and statements hinted that rate cuts could be on the table as early as the second quarter of 2025. This was a surprise to many who thought the bank might maintain a more hawkish or rate hike-ready position for longer to ensure inflation was completely under control. This pivot towards potential easing has made holding New Zealand dollars less attractive to international investors who seek higher returns, causing a sell-off. Compounding this pressure is the persistent strength of the US dollar. The greenback continues to be supported by a relatively robust US economy and the Federal Reserve's higher-for-longer interest rate narrative. When you have a weakening Kiwi on one side and a strengthening dollar on the other, the result is a sharp drop in the NZD-USD exchange rate. So where do we go from here? Technically, the break below the key support level in the mid-0.5700s is significant. This could open the door for further downside, with some analysts now eyeing the 0.5700 psychological level as the next potential target. Of course, markets can be unpredictable, and any change in data from either New Zealand or the US could shift the sentiment. We'll be keeping a close eye on upcoming inflation and employment figures from both countries, as they will be crucial in shaping central bank policy and the future direction of this currency pair. That's a quick rundown of the situation. It's a classic example of how central bank commentary can move markets in a big way. Thanks for tuning in. If you found this analysis helpful, please hit that like button, and don't forget to subscribe for more market updates. See you in the next video.